Hello, welcome back, everybody. SF Live news special. In a few short seconds, I'll be joined by Dan Wilton. He's president and CEO of First Mining Gold. We're going to talk about the exciting pre-feasibility study that's come out, that they published on their Springpole project this morning. Lots to talk about, a lot of KPIs, a lot of interesting numbers that we need to go put some context around. But before we do that, follow us on YouTube, follow us on Twitter. Make sure to leave a like, hit the subscribe button and the alert button. That way you get notified when we go live with another update. We're not going to allow questions for this runaround or for this session. I'm sure we're going to get Dan back on to do a more comprehensive session, but we're just going to focus on the PFS today. So let's stick with that, and I really appreciate Dan coming on. And let me switch over to Dan. Dan, wonderful. Good morning. I'm still allowed to say Happy New Year. I set myself a date, January 31st. So
that's fine.
Happy New Year, Dan. Good to see you.
Happy New Year to you, and always good to see you. Great to connect.
It's awesome to have you on, and let's dive right in. We're not going to talk about big history of the company. We've done numerous interviews before. Let's talk about the PFS. Run us through the highlights, and then we'll get into the nitty gritty.
Yeah, so listen, the highlights. We're delighted with the results that have come out of this PFS. We're talking about 995 million US after-tax NPV at our price deck of $1,600 gold, 1.5 billion pre-tax NPV. And, importantly, declaring reserves for the first time on the Springpole project, 3.8 million ounces of gold in reserves and in excess of 20 million ounces of silver, and all-in sustaining costs in the lowest quartile of the mining industry, and a capital cost that came in quite substantially lower than our PEA as we'd scoped down the size of the plant. But overall, this is showing itself to be a really important, strategic, and economically robust project.
Fantastic. You referenced the PEA. Like, what are the main differences besides CapEx? The CapEx in the PEA was way over $1 billion. People said it like, well, that's never going to get built, right? CapEx is insane. But what are some other main improvements now?
Yeah, the CapEx in the PEA was actually just a little over 800 million US.
Oh, okay.
Might have been over $1 billion.
$1 billion Canadian.
Yeah. And there was a time when that was a real impediment to people thinking about projects. You're never going to see these projects move forward. But Kai, I've been here for 2 years, and the first year that I was at First Mining, we heard nothing but, why does the world need another 1 gram ore body in Ontario, right? Côté's never going to get built. Hard Rock's never going to get built. Magino's never going to get built. Sure enough, all three of those are going. 2 are in construction, and 1 more is going into construction shortly. So I think it just shows projects like this have real strategic value. So the biggest change, 2 really significant changes on from PEA to PFS. Well, 3. There's a mine plan that's well further thought out and thought through, more detailed and focused, and that brings some more grade upfront. Lower capital, largely driven by smaller plant size. So we took the plant from 36,000 down to 30,000 ton per day. Still a big plant, but really some savings on infrastructure, and I think a better thought out and designed plant. And ultimately, those couple of things, plus moving to dry stack tails and waste co-disposal. We've eliminated the tailings dam from this, which was something that we really wanted to study the viability of, and I think we've demonstrated that it is viable, and particularly the way that it plays out through lower all-in sustaining costs. I think it makes for a really robust project. You're talking about all-in sustaining costs in the first 9 main years of the mine life, sub 600 US. This is a really robust project. It shows through in the payback period. 2.4 year payback versus it was about 3.5 plus in the PEA. So really, I think this shows a project that we think deserves to be moved forward. So we're going to keep going.
It definitely sounds exciting on paper here, that's for sure. And I obviously have a couple follow-up questions, right? So price deck, you used $1,600 gold. So I'm just curious, like, how did you arrive at that number?
1,600 was basically a long-term consensus average amongst 35 or 40 research sources that we'd looked at. So we thought that it triangulated pretty well. A number of other of our peers had been using that kind of number in the last couple of months. So. That's where we
Fantastic.
land.
No, always good. Always like easy question for me to ask, right? So it doesn't require a lot of knowledge on the technical side.
There you go.
But also, like as a follow up, you mentioned tri-stack tailings. That's always interesting. Do you expect that to make permitting a bit easier of the project? It's going to be an open pit project, obviously. So
Yeah, I think the dry stack has its own, and the tailings and waste co-disposal still needs some more study, and I think there's some more optimization that can come out of that. But I think what it shows is, the project has a pretty small footprint, and we actually shrunk the footprint considerably. Actually, eliminated an entire second waste dump with the dry stack and waste co-disposal. And I think it just demonstrates that there is some flexibility to figure out ultimately how this project moves forward. A lot of the members of our communities had concern, as people who follow mining around the world do, about tailings dams breaking because we're close to a lot of water, and what happens when the tailings end up in the lake. Well, I think this is one way that we can certainly answer that up front.
okay, lake is a good point, and of course, like it's always been a point of discussion, concern, maybe even rejection to a degree from some investors, right? It's the cofferdams,
Yeah.
right? And you now have some more clarity. You provided us with some more clarity in the PFS. You outlined $9 million directly for the cofferdams, and run us through now the cofferdams themselves. Like, what does PFS bring to us in terms of clarity there?
So listen, I think the important thing to know about the cofferdams is they've been engineered at a PFS level by a group named Bauer, a German engineering group and construction group that builds a lot of
So
cofferdams.
you can rely on it, right?
Naturally, you can rely on it if it's a German engineering group. I mean, does it get any better than that? No, this is one of the world's foremost experts who actually built a lot of the cofferdams around the Diavik mine in the Northwest Territories. So they understand it. The overall dimensions of the cofferdam, it's a little bit more than 900 meters. The maximum depth is 17 meters. The average depth, and in broad brush, is something like 6 meters. So these are not huge structures. And importantly, I think they've been well looked at, well engineered now by a group that does this professionally. And the interesting thing about the cofferdams, you and I were talking about this earlier, but some of the changes we've made on our team by bringing Steve Lines on as our VP Environment and Community Relations. Has now brought a bunch of his team over from the Hard Rock project that they took through the environmental assessment process and got permitted in Ontario. And Hard Rock's just sold, basically to Orion and Premier to Equinox for about 600 million US. But prior to that, Steve, as a proponent, permitted the Gahcho project, diamond project in the Northwest Territories, which had cofferdams and dewatering a lake. And as a regulator, he permitted the Meadowbank project in the Northwest Territories. So Steve kind of came at this from the perspective of, not only can it be done, but he's done it twice, which I think, should give people some comfort that, this is something that's not out of the ordinary. And I think we'll continue moving forward and understanding what this means and have all the appropriate safeguards in how we do it. But I think from a technical perspective, investors should take comfort that this is now clear.
Yeah, no, I think that was important. As you said, it's a PFS level. It's a proper engineering study, not just can we do it, can we not do it, right? Kind of estimation, right?
Yeah, indeed.
I hate to take anything out of your stride. You're super positive right now. You're in a really good mood, a good space. But what are some areas you can improve on? If you look at the life of mine production, it drops off at year 9. Grades go lower, costs go up a little bit. What are some rooms for improvement? What's some room for improvement, areas for improvement there?
Yeah, so there's a few that we outline in the release, but first of all, I think there's a lot of exploration potential around our property at Springpole, and then people seem to have forgotten that Springpole sits kind of as the anchor tenant in the Birch-Uchi Greenstone Belt, which is an analog to Pickle Lake and Red Lake. Like this is a meaningful geological province, which has seen a small fraction of the exploration of those other camps. So we think that there's real opportunity there for growing resource regionally and on our property. There's some infill that we can bring some inferred resource that's sitting as waste because inferred doesn't convert into your PFS mine plan. But with some drilling, we can convert some inferred into indicated. It's about 8 million tons, 120, 130,000 ounces potential.
jump in real quick, ask a
Yeah.
follow up to that, what you just mentioned? What's your conversion rate? Because I know you upgraded now in the feasibility or pre-feas to proven and probable as well. What was the conversion rate of the ounces?
Oh, I haven't done that calculation, Kai, but it would be, 4.6 to 3.8. So I want to say 80-ish something percent.
Okay.
If you count these other tons, it was 100 in terms of tons, it was 139, 121. So yeah, between 80 and 90%, I think.
Okay.
Yeah, no, I think it's one of the things about this ore body. It's big and has big volumes. It's homogeneous, so
Yeah.
it lends itself to good conversion. So there's that. There's some ongoing metallurgical work that we can do, and we're collecting some met sample now, where we think we can get the recoveries up another 2 or 3% potentially and looking at different styles of leaching and different potential flotation technologies. So I think that's certainly an opportunity. But no, there's lots that this can help move forward. I think the important thing is this project, as it's scoped right now, is really robust. And I think, on all metrics is something that people should have the confidence that it should be built.
Yeah, it's been a fantastic transition. Then ever since you came on board First Mining Gold, you went from gold optionality play to now gold developer, right? So you're really in that developer status, which the PFS proves. So congrats on that. Actually, that's a big achievement as well, in my opinion. So
Yeah, no, thanks. And we just want our valuation to reflect us being a gold developer
well,
and not just an option play.
it's going to happen.
But one thing at a time.
Right,
One
exactly,
thing at a time.
right? So
We'll keep taking risk out of the project, and it'll come in pace. So.
got to go knocking on some doors now. So
Exactly.
fantastic, Dan. I really appreciate you joining us this morning. Thanks for the news special here, running us through your numbers. It's been fantastic having you on, and we should chat. Actually, just summarize for us next 3 months. Actually, like news.
Yeah, next 3 months. I mean, we've got a bunch of field work ongoing at Springpole and starting, drills turning on a combination of metallurgy and some exploration drilling. Interesting things coming at Gold London Goliath and Treasury Metals, which we're a 40% shareholder of, and I think we're going to get a first snapshot of those economics. And at our Pickle Crow partnership, lots of really interesting drill results. They put out some this week, and it's worth investors following up on understanding how that's evolving, because it's a really exciting high grade story. So yeah, lots to come.
Lots to come. 2021 is going to be an interesting year, that's for sure. Awesome. Dan, thanks for joining us. Really appreciate it. Everybody else, thanks for watching. Thanks for tuning in. And make sure to follow us on YouTube. Follow us on Twitter. Leave a like, leave a comment, and hit the alert button. That way you get notified when we go live with another update, which we will actually do in 18 minutes with Chicana Copper. We're going to talk about their financing. Dan, thanks so much, and we'll see you soon.